Welcome back to the channel. Today we're talking about how to turn a loss in a metal investment into a win using the gold to silver ratio trading strategy. By the end of this, you'll see how an investment in metals can be profitable with the right strategy, no matter when you bought your silver or gold, with 3 must-follow tips. Stay tuned. Before we begin, please take a moment to like and subscribe to support our channel. Thank you. Now lately I've been seeing a lot of comments about people losing faith in silver. And I have to say it has been a big motivator for me to make this video. I really want to help you guys who maybe fell into the hype train when silver was really expensive and there were a bunch of other channels and Reddit forums screaming that silver's going to the moon. And maybe you started investing when silver was $25 an ounce and maybe you paid a $7 premium. And now you're looking at spot price of $23 an ounce-ish and worried you won't recoup that investment. You can, and I'm going to show you how by using the gold to silver ratio. It will take time, but it's possible to do. Now, people who are trading the ratio are on a slightly different game. The idea behind the gold to silver ratio is that the price in US dollars for an ounce of silver or gold doesn't really matter. If it takes 70 ounces of silver to buy 1 ounce of gold, then the ratio is 70-1. A trader using the gold to silver ratio will buy silver when the ratio is really high, then trade that silver for gold when the ratio is really low. This might be confusing at first, but if you do the math, it checks out. So let's say I bought 1,000 ounces of silver when the ratio was 90-1 and paid $32 per ounce. That comes out to $32,000, and that's a lot. But let's say I spent $32,000 in gold instead. I would be able to get about 12.5 ounces at a ratio of 90-1. Well, if I waited for the ratio to drop to 70-1 and then made the trade, going from silver to gold, I would instead have about 14.25 ounces of gold. If I traded again, this time exchanging my gold back for silver when the ratio goes back up to 90-1, I would then have 1,285 ounces of silver. If I waited for the ratio to drop again to 70-1 and executed the same trade, I would have 18.25 ounces of gold. I think you get the point. It doesn't really matter what it is in dollars because you're trading gold and silver as though they are currencies. Now there's a couple of caveats here, and I want to be clear. Most dealers, where you would execute these trades, are going to take a cut when you make the trade, and that's going to come out in either lower ounces or dollars. It's just the way it is, folks. Your local coin shop is not a charity, and they're trying to stay in business and make some money too. So they'll often factor in their premiums when executing these trades. So that needs to be considered when making ratio trades, and from doing some analysis, we've come up with 3 must-follow tips. And the first must-follow tip: small changes in the ratio are not worth trading. Someone who is trading the ratio needs to watch for big swings in the ratio and trade that, preferably a 30-point spread, though you can make a 15 to 20-point spread work under the right conditions by getting silver at a lower premium. More on that in a bit. Second, the ratio should be traded only for items that are high liquidity and low premium. 0 collectible or semi-numismatic coins. Do not attempt this with graded eagles, vintage coins, semi-numismatics, or other similar products. The ratio is best traded when you can keep the premiums ultra low and you won't have a problem reselling the products in a future trade. Make sure if you have a preferred coin shop, they're willing to work with large format silver bars. And that brings us to the third must-follow tip. The premiums on silver make this much more difficult to execute. While you can generally get gold for a 5% premium or less pretty easily, silver can be really tough. You might consider large format bars for this kind of strategy because you can get the premium under 10% regularly if you go with 100 ounce size bars. And that's why we have 100 ounce size bars on the table here. And don't be afraid to shop deals either, as long as it's not an esoteric round or coin. This will dramatically increase your ability to come out ahead on trades. The silver premium is the biggest impediment to successfully trading the ratio. So let me give you an example. If you executed a trade with 13.5 ounces of gold on March 7th, 2023, when the ratio was 89-1, and you bought silver that had a 20% premium because you wanted coins, you would have had 1,021 ounces of silver in exchange for those 13.5 ounces of gold. If you did that but executed a trade for silver bars at 10% premium, you instead have 1,114 ounces of silver. If you're buying in bulk, you can even get silver bars below a 5% premium in some special circumstances, and I highly recommend taking advantage of that where possible. One of the golden rules to follow here is never make a trade where you will end up with less metal than you had in a prior trade. Something is wrong with the ratio or the deal if this is happening. For example, if I start with 1,000 ounces of silver, trade for gold, and go back to trade for silver again, and I'm getting an offer of 970 ounces of silver, we went backwards. Pause, figure out what went wrong, and don't make that trade. Now, I'm a bit focused on the dealer trades because practically speaking, it's more likely to work. While you can trade the ratio by joining a private metals group and bypass some or even all of the premiums sometimes, outcomes are less certain. Some groups are legitimate, well established, others maybe less so. If you can find a group that enables you to make trades with minimal premium expense or even direct trades with no premium, that is going to make the gold to silver ratio trading strategy even better for you. More power to you. But I want you to know some successful ways to trade this ratio with a local coin shop or coin dealer, because the ratios are changing all the time. You often have a limited window to execute a trade at a favorable ratio. I personally would rather take a smaller improvement in my metals position than lose the opportunity entirely trying to get extra ounces. There's also lower risk when working with a reputable dealer. There's lower counterfeit risk, lower scam risk. You may not have to pay any certified shipping expenses as you may with a private transaction peer-to-peer. So there are advantages to working with a retailer in this space that will potentially reduce your profits a little bit, but I think the value there is well worth it. Now, timelines to make this work in your favor is in years, not months. Just like buying a house, it takes time to recoup an investment and profit from it. This is not a get-rich-quick scheme. You're going to have to work to make it work. You'll have to watch the ratios and prices, then execute your trades when the time is right. And you might have to do the math on how much you're paying in premium for a particular product. That said, it's really not that difficult to do if you follow the guidelines we've laid out here. If you want a quick and easy way to watch the prices in order to execute this kind of strategy, highly recommend downloading our app, available on both Apple and Android phones. The price pages have the gold to silver ratio on them, and you can watch the prices for other opportunities. It's the most convenient way to track metal prices either daily or weekly. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.